Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Alex Morris, President and Chief Investment Officer of FM Investments, to discuss simplified access to the complicated Treasury markets. Alex, it's great to see you again. Welcome back to Trade Talks.
It's great to be here. Thanks for having me back.
You got it. The FM Investments 3-month bill ETF, ticker TBIL, crossed $1 billion in assets under management in less than 10 months. What drove the growth behind that?
Well, we're really excited. We've been calling it T-billion around here for the last couple of days. And I think that's, really an effort. Really two things that play in there. One is Treasury rates have been meaningful for the first time in a long time, and they've stayed elevated, particularly on the short end of the curve. And on top of that, buying T-bills in particular sounds easy until you try it. And then when you realize that it's not as simple as you would hope, and that if you buy a 90-day, you're going to be doing this at least 4 times a year, maybe more. So we made that easy, and folks responded to that simplicity and being truthful in our messaging. We buy the 90-day on the run, we stay on the run, we keep you current to what you see on TV, and folks appreciate that yield and that simplicity.
Are elevated short-term rates here to stay?
I think for the short run, you call it the next year or so, the answer is yes. I mean, the Fed's made very clear. We want to fight inflation, and we're going to do that by keeping rates elevated. I think we even see another rate hike this year. And as a result, if you want to see current yield and you want to see numbers north of 4, the short end of the curve is the place to be. Whether that's TBIL, XBIL, or OBIL, our short end products, all of them are going to likely continue to show high yields in the short run, high current income, but the stability of a U.S. Treasury and the full backing of the U.S. government.
You started with 3 funds, expanded to a 4th and a 5th, and finally added 5 more. Are you done, or is there more product to announce?
Well, yeah, it's been a heck of a 10 months. We didn't know what to launch an ETF was like a year ago, and now we're up to 10. We think the benchmark series is complete for the time being. We've got all the key tenor benchmarks that you would want to see in the Treasury curve, so you can recreate that or recreate any of the multi-Treasury products in between. But we've got a lot of other clever ideas, a lot of learning from launching these products, talking to advisors, talking to investors. So you'll see an actively managed credit product from us in the late part of the summer, early autumn. Then a handful of other interesting Treasury and actively managed plays in the balance of the year, early part of next year.
All right, Alex, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.